Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday. It's January 19th. I hope you had a good extended holiday weekend, and that you enjoyed taking a day off yesterday. If you did, if you didn't, if you traded till lunch, I hope you had success as well. I generally don't trade those days because you can get trapped in poor trades that go nowhere, and you hang on and sit there, and then you have to exit with a loss. And so I generally don't like those type days and just stay out of them. So anyway, I'm still, as somebody teased me that I sound like Barry White right now, I'm still struggling with this head cold. I don't feel bad. I just cannot shake it, and so I'm a little bit hoarse, and I continue to, I'm all stopped up and clogged up, and I'm hoarse. So I apologize. I'm going to try to get through this as best I can. I may have to pause it from time to time with my throat bothering me, but hopefully by the end of this week I'll finally be better. But I've really been struggling with this for a few days now. So, uh, but anyway, let's talk about the trades. You can see the bigger picture here. Early on, it looked like a range day. You can see the range going on here, and then we bounced off the lows. But when we turned down and made these lower highs, then you got to draw your trend line and consider that something else is going on. And even though there was strong support here, and you can see we came back and tested it many times before we went lower, we ended up going lower. And you also probably should have measured this and looked for a possible measured move down. I don't think we got, well, we wouldn't say we didn't get anywhere close to that. We didn't quite get there. You can see that would have been a measured move down, but that would have been something to think about. But really, in the end, I don't think it was a really, it wasn't a trading range. It looked like it was going to be, but it's really a two-tiered channel working lower, and we just had some strong support right across here. So um, that's my take on that there. So let me back out a little bit more. We'll talk about the trades, and I'm going to move on through this just because of my throat and all. But early on, we were working up. This is the first break, and so we're looking for a retest to the high. And this is a second entry long right here. Notice we got two measured legs down, a nice second entry long, and it's good for exactly a scalp, and it turns down. So I like going short right there. Actually, when it broke below this bar right here, I like to go in short right there. And you can see if you caught that one trade, your runners would be good, and you can ride this all the way down, uh, at least till you get a break of the trend line, which was right here. So nice trade. If you catch that one trade and just get one runner or just one contract, I mean, it's good for entry would have been right there. And you exit on the first break of a bar. You can see that 16. That's 16 and a half points on one contract. So you only got to catch a runner every so often to really change your numbers. So you don't always catch them. That's the case, but it seems to be more of them lately because we get more of these runaway trends. It seems like. Uh, but also on a bigger picture, um, this is the this is well, let me just talk about all the things here. This is a failed second entry long. It's a third touch of the trend line that confirms it. There's a big bearish bar. You actually didn't have to wait on that one though. You could have gone short right there, but then it turned higher and turns back down again. So you could have added back on if you were already in, and it just takes off. But then you come back to the trend line here. This one is really should be green. I meant to change it to green. It's a perfect setup right off the trend line, a key entry point. It's also, you probably wouldn't have had this midline here though. It is a turn, pull back to retest that midline, but you probably wouldn't have that there. So you can't really use that one. But you got the shorter term one. But notice it moves up, it pulls back a little bit, and then moves up. On a smaller picture, that's a second entry short. This is not a perfect signal bar either. It's got a couple of ticks to it. But there's some reasons to consider that one. And if you want to be aggressive, there's plenty of room to get out. It's a key entry point. It's a bearish bar. If you've got a better setup, maybe it could be red on yours, but on my chart, that's definitely got to be green. And if you draw your trend line, you see there's no break of it or anything there either. It's another reason to be concerned about that one. But you come back here, you pull back to it again, and look at that big bearish bar. And it actually broke. This is another hidden second entry. It went higher first, turned down right off the trend line. I'm okay with using the stop right there because that bar breaks out the top and traps everybody and then runs down. But you could just enter with a stop right there at the end, and off it goes. And this is another good one that would have caught a runner, and you can ride it all the way down. I would have waited on your. I don't think I would have held on till it came all the way back to here. Once you got down here with this support area down here, that would have been a great place to look to exit on that one when you started finding support right there. And I actually like this one for a green back to the EMA. Notice that we bounced there. We went that one little bit tick lower and then turned up. You could have even waited on that one to get you a good bullish bar because you know you're well overdue to come back to the EMA. So there's a couple different ways to enter that one. It was tempting to enter this one, but you don't have enough evidence that this is going to hold yet. But when it holds a second time, and then even when you get that bullish bar, then you got a little bit more confidence in it. So, and again, it's still aggressive because there's been no break of this trend line yet. And lately, you get a lot of these big trends that just keep going. So you got to be real careful with those. So anyway, we bounce, we get a break of the trend line here. And this is when I'm assuming that we probably got a trading range. And let me explain why, because notice how we just keep working higher and we never come back and make a new low after a break. That's a pretty strong trend down. And to get a break, you're probably going to retest this low again unless it's a trading range. And so when it started going higher, my first thought is, hey, we got a trading range. And when I see a solid trend going higher, I'm going to go with it. But it turns out it's not, and we end up actually making a new low here, but it just keeps going lower, and it's not really a trading range. So, but notice what's going on here, and there's actually a shorter term trend line working up through here. It's tempting to go long on this one, but we didn't get quite back to the EMA. It is a failed second entry short. It is off that shorter term trend line, so you could take this one. It does go lower first and turn up, so I'm going to make that one green, but I think you're better off to wait on a little better setup. Notice we get the break here, but it bounces right off where you expect the trend line to be right there. If you draw this line off that right there, I actually had it a little bit higher at first, and I actually had it drawn a little steeper at first. But you drag that down to right across there, and you can see you get a bounce right there. But the main reason I like this one is because it's really bearish and looks like it's going lower, and it bounces and turns up. It gives you a really bullish bar. So I like going long right there because this is like a breakout pullback long. It's a reversal pattern really. Because we go right through the EMA and then turn down and then turn back. If we were really going lower, this should have pushed on through or should have turned back down under the EMA again. And when it breaks higher there, it's pretty obvious that's probably not going to happen. This one is close, real borderline to being green, but we're looking for a retest of this high. Notice we get it and then turn down. And I almost like going short right there, but you don't really get a perfect bar. I'd like to see a little bit more bearish bar than that. It's got a higher low, and then the next one, it does break lower than that, and it ends up closing back up in here more like a doji instead of real bearish. Again, that one could probably be green for a short, but I didn't mark it originally because it's not. I'd like to see it a little better than that. little better signal bar than that, because we do have the break and a new high, and so it wouldn't surprise me if we turn back down again. But notice what happens. We bounce right off this trend line, and this is just the first entry, and there's no, notice you got a trend line working down through there. And you could have, you almost want to consider going long here on a second entry, but the bar closes way down here, and then this one turns up. So now you got to go long right into the high. So you really need to wait on that failed second entry short, and that comes right there. And notice how it doesn't go very far and then pulls back and tests the line again. You wouldn't be out of that one yet. And when it didn't go lower, I like adding on right there. This is one of those where they kind of make a little double trap, and then it takes off. And this one runs on out of there pretty quickly. And again, you want to, as soon as you get a confirmed high, you draw your trend line off that. You would have been drawing it every time it turned down, but this time it holds. And notice what happens here. This one's really interesting. This is what looks like a real big, what a nice reversal pattern. But we don't have a retest. You got this channel working up here, and that's the first break, and we don't have a retest yet. We may not get one, but when you get this, what looks like a trap here, notice it breaks, turns lower, makes a new low and turns up, and that's a reversal type bar. I like going long right there, looking for a retest of this high. It's good for a scalp, but then it turns right back down. But you don't want to go short right there either. There's no confirmation that this is not going to continue higher, and maybe you get another little trap and get a chance to go long again, but it just, the bottom falls out of it. So this is one of those where you just don't really get another chance to enter. And notice that first leg, and there's your measured leg, and that's exactly where we go before it bounces again. And so this one was a little tricky. It's one of those you just have to watch, and it's hard to watch that, and you really want to get in, and next thing you know, you jump in down here, and then it stops you out and then goes exactly where you thought it was going to go. My thought was at this point was, hey, we're working back down here to make a retest for this original low on this break. And that's what it looks like everybody was thinking. And that, or else that, plus a combination, this is probably a range because there's that low of that support area again. But when we turn up here, notice this makes a new high, so you get a pull back first entry, pull back second entry, failed second entry long, just take that one short. It confirms, it kind of confirms that trend line, possible trend line right through there as well. It wasn't real obvious because we shot a little bit higher right here, but I got this off the lows and drug it up, and it fit. And when we continue to touch it on the way down, you kind of have to assume it's valid. But there's a trap right here. I like that for a short. And then it didn't really, it's good for a scalp, but it didn't really go anywhere. It's just kind of going sideways here. So when you get this one, and it's not a real strong, it's a second entry short, but it's more of a neutral bar. It is off the key entry point. It is off the EMA. We're not quite back down to the support area. So this one again could maybe be green, but this is just more of a trading range congestion type area, and I just don't think it's worth entering in there. And then you definitely don't want to enter short here. As bearish as that bar is, you don't want to enter short here because this is a strong support area. You can see we've bounced there multiple times, and so you can't go short into that. You want to be thinking about a reversal here. And notice what happens. You get what looks like a breakout pullback short. Again, I don't think I would take that here. I usually like to see a double test of that first, and you only get one test of that support, and then it goes down, and then it reverses. Look, we're kind of a decent way away from the EMA. This is a reversal type bar, so I like going long right there, trying to catch a run back to this EMA. And sure enough, it's a failed breakout. It runs back up, and this is another easy runner. It just keeps going. And that's one thing you've probably heard me say before, that some of these trades that are slightly more aggressive reward you more on runners. And even though I say this is slightly more aggressive, this is a pretty solid trade that we that we teach with our strategy of the breakouts that fail, they almost always go back and at least test the EMA, even if they're going to go lower. And so if you understand what's going on, this is not that aggressive. But for some newer traders, it probably would be, because tomorrow you'll see this same thing and it'll keep going. You'll say, well, yes, yesterday it worked and today it didn't. And then you start guessing and you'll guess it wrong every time. So um, this is probably, you got to be careful and know what you're doing on this kind of trade. But they do tend to pay off a lot more. And if you just catch this one with a runner, you get 4 or 5 points out of that. So nice trade. And then we get a break, move to a new high, and guess where it turned? It confirms that trend line. Unfortunately, you don't get a very good signal bar. So you really don't want to go short there. It is a second entry, but it's too bullish. Just signal bar. By the time this one forms, you're too close back to the EMA. So just wait, see what happens, and guess what? Um, you get another pullback here, but notice it closes right into that EMA. If that would have went out the other side all in one bar, I would have said enter there. But again, you just wait, and then it pulls back. It gives you the failed second entry short. It confirms this trend line. It touches that trend line again, gives you a big bearish bar. That's a perfect setup. It's a trap. It's the whole bit. And look at it go. And again, you get a runner out of this. So there's been several of these a day that you get nice runners out of them. And I like this one because it's it pulls back to the EMA, or I'm sorry, pulls back to the trend line, test it. Now you treat this like a breakout pullback short. It's obvious now that this trend line's here, and so I'm looking for prices to at least come down to this midline. And so we got plenty of room there. So I like that trade. It's real close to being green. The main reason I don't is because it really confirms the trend line is the third touch, and it's a fairly bearish bar. So I left it red, even though it's real close to being borderline to being a little bit aggressive. But it's, if you drag your line on across here, you can see it's a breakout pullback short as well. So nice setup there. And then we bounce again. And again, it's real tempting to go long here, but now you've got a trend line up here working down, and we are coming off the midline now. And that's the first break of this shorter term trend line. So I think it's too early, but there's some arguments for taking that one too. Same thing back over here. So just think what we talked about over here happening right here. And we are coming off the midline. But if you're seeing this midline, then we got a bigger picture downtrend here, and we don't want to go long in a downtrend. So, and some of these downtrends lately have been extremely, they've been extremely tough moves. So, but anyway, we're working up. We get a break, move to a new high. That's just your first move off. I think you're better off to wait and see if you get a better short there, and then it breaks higher and turns down. Look how bearish that is. You could have actually gone short, since that's all in one bar right there. But even without that, just put your stop right there. So a couple of different ways to enter that one. Runs down, hits the midline, and it starts bouncing. And we just kind of start going sideways here. Look how the midline, or the EMA is right in the middle, and we're just swinging back and forth. That's when it gets dicey, so you got to be real careful. I don't see any. It's tempting to go short right here, but with all that support right across there, you got to be careful with that, especially since we just came off the lower side a couple of times and we keep bouncing without going lower. So I think you just have to wait on a better entry. Even this one is a little bit questionable because we're not back up to the high, but notice you got that. That's a failed break out of a trading range, and we'll probably run back down to this side before we bounce, and that's what happens. But then we make a lower high. It's still not, you still can't go short right there. Even though you could almost treat this like a failed second entry long, you get your true second entry long right here, and that confirms another possible trend line. Look how bearish that is. I like going short now. because each time you make that lower high, it's telling you something. It's tempting to even go short here, but your signal bar is not very good, and the fact that this didn't take off this time is really questionable. But when it goes lower and makes another lower high, then I like it, because now you've got multiple attempts to go higher. You almost could enter right here too, um, but I like waiting on this one better, and you get a little better bar. Even though it looks kind of doji, it's only a couple of ticks off the very low, and there's a lot more stem at the top, so it's more bearish than neutral. And look at it go. Because a market that can't go up is going to go down, and a market that can't go down is going to go up. Um, but notice how each one of those, your clue is that each one of these pullbacks makes a lower high. And this one could even be green, really. This one's the only one that you definitely can't take. This one, we'll go ahead and mark it green. But I think you're better off to wait and get a double test. And so that's your first test of the support, and that's your second test of it. So that's the reason I like that one red and that one only green, because that's your double test of it. And it held both times. And then look at it go. And you can tell as we go on here, my throat's getting worse. So we're just about done. But anyway, this thing, the bottom just falls out of it. You can't go short way down here. There is probably another steeper, shorter term little trend in here. Notice we get a break here and a new low, and then it bounces. You draw your one up, you get a break, and it tries to go higher and turns back down. And so I like going short right there off that midline, thinking that we're probably headed to the low. And that's the last one you can take for the day. There's nothing else after that. So really good day. It seems like the MO lately is that we start out looking like a trading range, and then by the end of the day we end up trending strongly in one direction or the other. So don't get, you just got to follow the price action, and so don't get tied into it, and don't, when you don't go back, when you get the break of this shorter term channel and don't instantly go back for a retest, then start going with what you got. And same thing here, when you get the trap and you can't go any higher, start going with what you got. And that trips people up sometimes. So don't get married to anything. I mean, nothing is 100% in trading. Even though our rules work 90% plus of the time, they're not 100%. But we know the bias, and in 90%, 90% is really good odds. All you need is 51% if you play them right all the time. But at 90%, as long as you stick with the rules, you're going to be right a whole lot more than you're going to be wrong, and you're going to come out okay in the end. So just keep that in mind. But anyway, I'm not going to prolong this today with my throat the way it is. I'm hoping by tomorrow maybe I'll be better. If not, I'm going to have to probably go to the clinic and let them give me a shot or some antibiotics or something. But like I said, I don't feel bad. I just am clogged up and have a hard time talking, and I've got this scratch in my throat and the cough and all that stuff. So I apologize, but hopefully I'll be better as the week progresses here. But I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.